The economic cost of Japan's disasters, how badly has growth been dented? And how China plans to cope with its worst energy crisis in years. Hello and welcome to this Thursday edition of Asia Business Report. I'm Sharonjit Lail in Singapore. Now we start with the world's third largest economy, Japan, which unveils its growth numbers for the first 3 months of the year very shortly. It's a chance to assess how much the earthquake, tsunami and ensuing nuclear crisis has hit the economy. According to Kaoru Yosano, Japan's economics minister, the disaster is likely to reduce GDP by 1 percentage point. In March, the government predicted that the cost of rebuilding would be around $300 billion. And the government's also scaled back power use over the summer, and that's expected to hit businesses. Now, the BBC's correspondent Roland Burke has more from Tokyo.
These days, shoppers in Tokyo are looking for energy-efficient gadgets, from the latest low-power fridges to air conditioners which remind their owners to keep warm air out.
So this thing knows if you've left the door open, you're letting in hot air?
The earthquake has left Japan with an electricity shortage. Everybody has been urged to use less.
Sales of LED lights have doubled, even though they are much more expensive. They cost 10 or 20 times more than normal bulbs, but a lot of customers are buying them in bulk. The level of interest is really high.
The government is even asking Japan's famously sober-suited businessmen to do their bit. They've been told to consider T-shirts and sandals for the office this summer, so there's less need for air conditioning. But just saving electricity will not be enough. How it's generated and distributed is also being reassessed. A beer factory in Yokohama points to what may be the future. It's self-sufficient in electricity, and now spare capacity is being sold back to the national grid. 3 massive gas generators have been running continuously since 2 days after the earthquake. Harnessing power from factories and solar panels on homes is likely to be increasingly important to Japan.
I don't think any of us imagined we would lose the power supply because of a natural disaster like we did. So we've realized we took unlimited electricity for granted. We also now know we need to save energy and not to waste it.
Keeping the great cities lit through the hot summer will be a challenge. Even before the disaster, Japan used its energy efficiently. Getting by on less will take innovation, and that could be an opportunity for the economy. Roland Burke, BBC News, Tokyo.
And also curtailing its energy use is the world's largest energy user, China. Several cities have begun rationing electricity, including Shanghai and manufacturing hubs such as Chongqing, in order to stave off an energy shortage that the government says could be the worst since 2004. It's due to soaring coal prices, which is squeezing profits at state-owned power companies. Power cuts occur every summer, but this year rising coal costs and a drop in hydropower output could mean they could be much more severe. And Stephen Joske joins us now live from Beijing. He heads the China Forecasting Service for Economist Intelligence Unit. Now, Stephen, how might these energy cuts curtail the manufacturing sector, which is still the backbone of China's economy?
Yeah, I think the impact on the manufacturing sector will be noticeable, but you know, if we look over the course of the coming year, I think it'll be less significant than some of the early indicators would suggest, because the shortage of electricity is primarily driven by government policy, the anti-inflation measures. And if the situation does get serious, the government can quickly change those policies.
That's right. As you say, I mean, the government is pretty much caught between a rock and a hard place. They're having, they can't really raise energy prices that much because they're trying to temper inflation, as you say. But again, these power companies, you know, aren't making any profits, and therefore they don't have enough energy.
That's right. But I think that the situation should pass soon, because on the one hand, we've got the tightening measures are starting to work, and we're likely to see a slowdown in the construction industry, which will reduce demand for steel and cement, which are heavy energy users. And as soon as there's signs of broader inflation easing, the government's likely to allow some energy price increases to encourage greater production.
But, you know, China also very recently sort of stopped, they banned exports of diesel as well. So it does seem like this is a big energy crunch.
Yeah, it's certainly bad policy. I mean, the simple solution is to let energy prices rise so the market can sort it out. But China has a long history of controlling prices when it's worried about peaks in inflation. But I think the good news is that inflation in China is largely driven by food prices, and that's a fairly short cycle because the food supply does respond to these higher prices, and then prices come down. And as inflationary pressures start to ease, the government will be more comfortable passing on electricity price increases. We've already seen, even despite the high inflation, the government did allow a petrol price increase. So they're not completely averse to using some market signals, it's just they want to moderate them.
Right, we'll leave it there. Stephen Joske there from the Economist Intelligence Unit in Beijing. Thank you.